Hi, this is Jim Sackman, and this is another one of our Success Friday videos. And, this is part of our series on the Way to Wealth formula, which was popularized by Brian Tracy. And this week we're going to talk about profit. First we talked about customers, and then we talked about revenue, and now we're going to talk about profit. And this breaks into 2 points of the income statement, and that is pretty simple. That's the uh, gross profit and then net profit. And let's talk about gross profit first. Um, so, gross profit is essentially the percentage of the revenue that you end up with after you've taken all the costs in hand that directly relate to making your product or service. So let's say you're making a car. So all the materials to make a car, all the parts that go in, all the labor that's involved to directly make the car, that's the cost of goods sold, or COGS, which is in the center of the screen here. So if you think about what you have as revenue and you subtract off the percentage of cost of goods sold, you end up with gross profit dollars. Now, one of the things that people talk about when they talk about this from an investment standpoint, they talk about gross margin as a percentage or gross profit as a percentage. And gross profit, gross margin, is the 100% minus the percentage in COGS. So in this case, you'd have a 50% gross margin. Now that's really important because essentially you can't make any more profit on your business than your gross margin. Think about that, right? So if you sell a car for $30,000 and it costs you $20,000 to make it, the most possibly that you could make as profit in that business is $10,000. So that's one part of it. The second part of it that's really important is COGS is primarily about variable cost to make your product, which means if you think about it, if you're a car manufacturer and you don't make cars because you don't sell any, then then the cost to build the car exits your business. So a company with more dollars in COGS, not percentage, but dollars, is generally because they're going to have higher sales. Percentage is important because it tells you the amount left over that's to spend on the rest of your business, which is on the next slide, which is net profit. Now, net profit is the actual profit in a business. It's after you've paid everything. Another term you'll have heard is EBITDA, and that is an acronym for earnings before interest, taxes, depreciation, and amortization. So essentially, it's the operating profit of your business. So from an operating standpoint, how much money have you made? And this is almost always expressed in dollars. And OPEX can also be looked at as a percentage. So what is operating expenses? It's all the stuff that you do in a company that doesn't directly create a product. So sales is a classic example here. General and administrative expenses like bookkeeping and insurance, all of those are operating expenses. And why are they important? Because they're generally about the fixed cost in your business. And you'll say, well, hey, wait a minute, there's some variable costs there. Salespeople get commissions. You're correct. But really, the bit that you've got to overcome is, suppose you have no sales. How much business do you have to have? How much gross profit dollars do you have to be able to pay for everything that you need? And that's a bare minimum to have a break-even business. So if you think about it, if you have zero net profit, that means your gross profit has covered every expense in your business. That's a good number to know. That's your break-even number, and it's really important. So something to think about here, and I'm going to come back to this in a later episode. If you've got cost to build your product, not every dollar worth of revenue falls through to gross profit, and therefore not every dollar falls through to net profit dollars as well. So let's say that you've got 50% gross margin and you need gross profit of $15,000. You need to have $30,000 in sales to get that $15,000 of gross profit, so that you can have, in this example, a net profit of $1,500. So there you go. That's a little bit about profit and how that works and how things happen. And we'll talk about this in a later episode when I talk about how to make your business more profitable. So this is Jim Sackman, Focal Point. Change your business, change your life. Have a great day.